It takes confidence and conviction to trade properly, to not hesitate. If you're hesitating and questioning yourself, you're never going to make any money. You have to be on almost like autopilot. Like when I'm trading well, when I'm in the zone, I'm not thinking about what I'm doing, I'm just doing it. I think being too focused on the results can really mess you up. Just focus on putting on good trades, following your rules, not hesitating, getting in at the right points, getting out at the right points, trimming when you should, trading around a core position properly. If you do all that right, the results will follow. There are times when a trader knows he's doing something wrong, and yet he'll continue to make that mistake, not knowing that it's not a good decision. And that's where I guess hope comes into the equation, or you just start dreaming.
Hello, and welcome to the Trader's Journey for Investors Underground. In this episode, it's an honor to be joined by the one and only Charles Harris, Portfolio Manager at O'Neill Global Advisors. Charles began his career in 1999 as an analyst before being hand-selected by the legendary William O'Neill as a portfolio manager the following year. That moment sparked a professional career marked by extraordinary success and sobering lessons. Alongside his professional career, Charles has been trading his personal account since 1995, compounding it by thousands of percent during bull markets and enduring crushing drawdowns during bear markets. His journey is one not just about big returns, success, and charts, but about the resilience, humility, and introspection required to make a professional career out of trading. It's my honor to introduce Charles Harris. Hello, Charles. Thank you for being here and welcome to the show.
Thanks for having me, Anthony. A pleasure to be here.
Yeah, Charles, I've listened to a couple of your other podcasts, notably one with mutual connection and friend Kim Ann Curtin, and absolutely loved that. I watched your a Trader's Journey presentations that you gave, and frankly, I was a little bit floored by those. I loved just how meticulous and open you were with not just the impressive profits that you made and the compounding, but also being really vulnerable in a lot of those moments with some crushing drawdowns and being very introspective about, maybe some of the errors that you made and lessons that you learned. So it's really very incredible for me to get to chat with you like this. So thank you.
It's a pleasure. I mean, I mentioned to you earlier that giving those presentations were really, in a sense, part of my own healing process. Kind of coming clean and, showing that even professionals who've had a long-term record of great success can blow it if you kind of lose your mind. And I should basically tell you, during this, all the trading we talk about is really my personal trading as opposed to what I do for the O'Neill family. I'm not allowed to talk about that, but everything we talk about will be about my own kind of journey in my own accounts.
Yeah, absolutely. That was one of the footnotes that I wanted to make very apparent, which is, what you do at a very professional level as a career can be separate from what you do personally in your own account. And even that alone, I found to be absolutely fascinating, because I think for a lot of people, the markets demand so much of our time just to be able to focus in one capacity, but you're trading, multiple accounts. And so, that's just, I would imagine, takes a lot of time as well.
Yeah, no, I do trade a lot of accounts, and it's not that necessarily the way I trade is that much differently between the firm and my own accounts. But with the firm, if I do jury duty to do my best for the firm, and they're looking over my shoulder. I mean, they know what I'm doing every moment. And so having that accountability to a client is a little different than trading for your own accounts where there's no one watching you and you can do what you want to do. And sometimes you can make decisions and make errors that, bad trades, where you're not really accountable to anyone except yourself. So, that's one thing about trading is you really have to be incredibly disciplined and consistent if you're going to have a long-term record of success, because you can have 99 great trades in a row, and if you blow it on the last one and really make a huge error, you can literally unwind all 99 of those trades and end up at a loss. I mean, I've seen it happen. So yeah, you have to be incredibly consistent and disciplined in this area. So
Yeah, and that's a great point because so many of the listeners that I've spoken to are retail traders, and they're trading just their own account, and they don't have a lot of that accountability necessarily. And so it's just great to be able to let them know that just how important accountability is, because without that accountability that you speak of, it's almost a wild card. Anything can happen, even to like extraordinary traders like yourself.
that's absolutely true. And, I started as a retail trader. So, I mean, the way I found my way into the O'Neill organization as a portfolio manager was through my personal success trading my own accounts. So, being a retail trader is, the sky's the limit. You don't need to be a professional or be running other people's money to, generate a lot of wealth in the market. I never anticipated or was even vying for being a portfolio manager. At the time, it's just I kind of found my way into it. I got really lucky. The timing and everything kind of worked out perfectly. But at the time, my goal was just to trade for my own accounts, build up a certain amount of wealth until that's all, until I could just do that basically for myself without working. That was my goal. And honestly, for much of my career, I've made as much or more money in my own accounts as I have, trading other people's money. So yeah, it's like I'm there with everyone else.
And Charles, what was your path into trading? Did you study finance, economics in school? How did you discover the stock market in general? What does that all look like for you? Where did it begin?
At UCLA, when I was a student, I was probably in my junior year. This is in '87. A friend, I knew nothing about the stock market. I had never really invested or anything. And a friend of mine was, of course, this was during a great market, before the '87 crash. And a friend of mine was in the Fidelity Magellan Fund. And he was telling me, it goes up 3% a month and it's great. Just put your money there. And I'm like, okay, so I took whatever money I had. I think I had, a few $1,000. And I put it in that fund. Literally, I think it was the top day in August before the crash. And, 3 months later, I lost, a third of my money. So wasn't a great deal of money, but it certainly got my attention. And so I started to pay attention to the stock market. I started watching Louis Rukeyser, which was a show on National Public Radio every Friday. It was a great show. And so I started kind of educating myself. And I would start to go to the library and look for low PE stocks. That's all anyone really talked about that around that time, particularly on that show, was more of a kind of a valuation orientation. So I'd look through financial journals, and it was very unsophisticated. I knew nothing about technical analysis. I'd never heard of Bill O'Neill. I was just trying to find low PE stocks and trade my little account of a few $1,000s. I graduated with a degree in psychology, a double major in psychology and sociology, with a minor in accounting. So as far as finance, I didn't really take a lot of economics courses or finance courses, but I took a lot of accounting. And I just had an interest in the market. But again, I knew nothing. I wasn't successful as an investor at the time. I just would buy little cheap stocks with low PEs and hope for the best. And I didn't really make any money. And I probably would make a little here, lose a little here. And I was only trading, under $5,000. So it wasn't even trading at the time. It's just I was fascinated with it and I loved it and I was interested. And then I also came across the Peter Lynch book, One Up on Wall Street, which is a great book. I recommend everyone who's interested in the market read that book. And that really got me interested because he was one of the best performers during the 80s, running the Fidelity Magellan Fund. And it's very readable, very relatable for the layperson who doesn't have a CFA or an MBA. And he talked about investing in companies that you knew just through your daily life routine. Could be a store you saw in the mall, or a restaurant that you like to go to, or trends that you see happening in your own environment. So that really got me interested. But again, nothing really took off for me until I joined the O'Neill organization as a research analyst.
What was your day-to-day role as a research analyst, and how was that different the moment that you were kind of hand-chosen by William O'Neill to become a portfolio manager? Can you talk a little bit about the difference between the two jobs and what that moment was like? Because I think that would probably be a pretty memorable moment for you.
It was amazing. Yeah. So prior to the working for O'Neill, I was working for a boutique real estate firm doing valuation analysis. And a cousin of mine who was an analyst for Oppenheimer at the time, who was like one of the very noted Wall Street analysts. They had the Wall Street Journal would rank the analysts, and he was one of the top guys. He would tell me, my cousin would say, you should get into this business. You make a lot of money. It's not that different than what you do in real estate. And I hated what I was doing in real estate. So my goal was really to be an analyst. It wasn't to be a trader or a portfolio manager. I just wanted to be an analyst. But it was hard to get a job at a buy-side firm or even a sell-side firm without an MBA or a CFA. And there was a job posting at the O'Neill organization in the research department, and I actually got rejected the first time that I applied. And a couple years later, I applied again and got in. And my job in the research department at the time was really more of, it really wasn't true analysis. It was really almost more glorified data entry. This is way before we had computers doing it or AI doing it. They were, about a group of 50 of us, during earnings season, we would put in all the earnings from the companies. We would normalize the earnings, taking out extraordinary charges and one-time items and that kind of stuff. But it wasn't really true analysis. It was really more maintaining a database. And my expectation at the time was I'd be there for a year, and then I'd apply for a sell-side or buy-side firm. But, the moment getting into that company and just having access to real-time quotes and just being around it, having access to Wanda, which was our online kind of a platform for charts. It was like Daily Graphs online. At the time, Daily Graphs was a retail product. It was like a book of the leading stocks, basically. And so having access to all the data is really what got me super interested in starting to learn how to trade. And when I started at the company, I also had access to all of the broker reports because we would input all the estimates, earnings estimates, into the database. And So I thought I'd struck gold. I thought, oh my God, I've got all the Merrill Lynch, Goldman Sachs, Morgan Stanley, all the, CFAs and analysts telling us what they think of the stocks and putting on price targets. So I thought I was just going to hit a rich based on that. And I just, looked for the stock that would have the greatest, where the analysts thought it would have the biggest move, within a year. And those are the stocks I bought, which did not work out too well. I mean, I lost probably half my money in the first year just following analysts. And that's when I learned a very important lesson. Don't trust analysts. They don't really know much more than you do with regard to stock picking. They might be great analysts, but there's a lot more that goes into trading and stock picking than just the raw analysis. So that was an important lesson to learn. But, this was during the mid to late 90s. I started the O'Neill organization in 95. And again, the first year, I lost at least half my money, which was just a few $1,000s. But at the end of 96, I wrote down my rules on like 4 sheets of paper. I really wrote down like, okay, how am I going to trade? What is my strategy going to be? Like, who am I? Am I going to try to be a long-term holder? Am I going to be a short-term trader? And I've known, just from that year of trading, that I like to lock in my gains. I thought it was easier to hit singles and doubles than to try to go for the home run. And I decided to basically, with a set of rules, start trading again in what was a good market at the time. And that's when I had my early success, basically swing trading. And that swing trading during 97, which was my first year trading with rules, I was up a little over 700%. And then the first half of 98, I was probably up 100%. And that was when we hit our first bear market in 98. There was a 3-month bear market. NASDAQ fell around 33 or 4%, I think. That was revolved around the long-term capital management blow up and the Russian default on their debt. And I lost about 2/3 of my money in that 3-month period. So that was a harrowing experience. And I thought at the time I had just gotten my CFA and completed the CFA studies and passed the exams. And I was going to apply for jobs as an analyst because I just, lost 2/3 of the money I had made. I kind of felt like, was I just lucky, over this past year and a half? I wasn't sure. And I interviewed with a boutique firm in LA, and I almost got hired. Thankfully, I didn't get hired, or my whole life would be different, I think. And I did not get the job. And right when I found out that I didn't get the job, the market turned in October 98. And that led to like huge success for me. I was up 1,000% in 99. And even at that, at that level, starting with like $5,000, if you're up, triple digits, a number of years in a row, you can make literally millions of dollars. So and that's kind of what happened for me. I mean, I had great success in my own trading account during that time, working in the research department. And again, I had access to everything. I had all the real-time quotes. I had charts. I would stay late after work and do my research. I would come in on weekends. And one day in latter part of 1999, Bill O'Neill came in. I had to trade through O'Neill had a retail discount brokerage that I had to trade through. So they had a record of all my trades. And I had mentioned to my boss that if there was ever an opening in portfolio management, I'd like to be considered, because he didn't know who I was. He would come in once a year and kind of give us a talk, but I didn't really ever see Bill. And one day he walked through the door, came into the research department, plopped down next to me, said he wanted to take me out for lunch, and offered me a job actually as an analyst for the portfolio managers. And I said, well, yeah, that's great, but I'd want to be a portfolio manager. And he kind of chuckled and said, yeah, in due time. So I accepted the position. He brought me downstairs at the beginning of 2000. And for 6 months, I just sat in a cubicle outside his office. He gave me everything I needed to trade. And I would write up little reports for the portfolio managers if they requested like some research on a company. But really, he just allowed me to trade my own account during that time frame. And I was making huge money that first half of the year in 2000. Even though the market peaked in March and started its downfall, I was up hundreds and hundreds of percent that year in my personal account up until September. And anyway, Bill gave me some money to manage in June of 2000, and we caught a little, the market corrected very quickly. It was off like 25% in just, probably a month and a half or so. But in June of 2000, there was a little counter rally, and he gave me money like right at the beginning of that. And I was up like 50% in like 6 weeks. Then he gave me a little more money. He moved me into his office, and we became very, very close. And that was the beginning of my kind of my trading career. Ultimately, I lost most of that money that first year because when the market peaked, or when it really started to get in trouble, and after that counter rally kind of dissipated, I didn't really have a lot of experience trading in bear markets. I made all this money in bull markets, and I wasn't really prepared for what could happen in a serious bear market. And so the first few years were really tough. I lost a bunch of money in the firm in 2021 and 22, which was an incredibly bad year. And it wasn't until the bull market started again in 2000, in 03. So 2000, I got money. I made money the first year. 2001 and 2002 were pretty bad years. In 2003, I started over again. I got whole, and from there, it just, I had pretty good success.
That's incredible. What do you think, in retrospect, that he saw in you beyond just being able to make money? Do you think he saw someone who was young, dedicated, hungry for this, and wanted to take you on board? What do you think about that moment from his perspective?
I think, Bill is an amazing guy. He wasn't interested in your credentials, where you went to school, what your degrees were. He didn't care about any of that. All he really cared about was if you were able to make money in the market. And, he didn't hire portfolio managers like out of college, or if they were trained at a certain place. None of the portfolio managers were hired as PMs. Most of the people started in the research department or in other areas and proved that they could make money in their own accounts, and they were hungry to kind of trade and had a love for it. So I think I love trading. I love what I do for a living. I feel very, very fortunate to get to do what I do. I don't even consider it work. I'd be doing it anyway. I just enjoy it. And being in a job where there's no limits to how well you can do is very exciting. It's very unusual to kind of be in that position where there's just no ceiling. If you execute well, and there's no excuses either. It all comes down to you. And I just love being in an opportunity where, that's the playing field in a sense. So I think really it was just a success I had in the market, being up 700% in 97. I think I was up like 20 or 30% in 98 after having, lost most of my gains in the second half of the year. Um, and then being up, tenfold the following year. I think he was just really excited that, wow, look at this kid. He's hot. He's proven it. Starting from basically nothing and making, quite a bit of money. That's what he was looking for. But yeah, and someone who is just, there's a certain intensity to in trading. It's something like that's all I did. Like I just loved it. I would constantly be doing research. I'd be looking at my positions. I'd be analyzing. There's a certain passion I think you have to be successful. You can't kind of just phone it in. You actually have to do it. And that's why I would say that, a lot of people want to be traders, but they don't want to put in the work. And it definitely does take a commitment, I think, to be successful. You can't kind of half-ass it. So yeah, I think ultimately actually it was really my performance that got me the job, but we got along really well. I mean, we had a really nice relationship. He was an amazing mentor.
What were some of the biggest lessons that you learned from him? Maybe in that first year and then even beyond that, over the course of your career, because as time goes on, maybe there's something you learned early on that you didn't really understand the gravity of until later on.
Well, one thing I learned early on was that Bill was open to how I traded. I was more of a swing trader. I've always been more of a swing trader, and I'm very comfortable buying weakness within a trend, within an uptrend, and selling strength. So I was trading much more actively, I think, than most of the PMs, and trading really counter to how a lot of the PMs traded, including Bill. Bill was he was always buying strength. That's the O'Neill discipline. That's the approach, is to buy breakouts, buy strength, buy relative strength. And here I am kind of buying things on pullbacks. He never really, I think, quite understood it. But at the same time, he said, if it's working for you, don't change it. So he was open to that. And in a way, almost gave me permission to be my own person. I don't know that he ever necessarily agreed with it. I think he always thought it was a weakness, buying on weakness, because you can get into a lot of trouble if you mess it up, or if you don't do it properly, or if you don't realize that, when you're wrong. So it's something that you really can only employ in an uptrend. But in an uptrend, I think it could be one of the most profitable strategies is actually swing trading within an uptrend. I've always had it. I kind of coined my own phrase. I called it elevator trading. So my goal was always to try to buy a stock, at the pivot or before the pivot, but when it was showing strength, that it was forming a base, for example, buying a upside reversal during the right side of a base, or just buying an alternative pivot, and writing it up. And my goal was to kind of take the elevator up, sell it at the peak, and then get off the elevator and get onto the ground floor of a new stock. So it's constantly, the thought process was, I get on the ground floor, go up, get off, and now I'm on a new ground floor and keep going up. So that was what I tried to accomplish. That's kind of a fantasy. It doesn't really work that way, but that was always my goal, which is why that's really how I tried to swing trade. And so I think, Bill gave me permission to be who I was. And as long as I was successful, he had confidence in me. And he really did have a lot of confidence in me and in his PMs. And, I think it takes a lot to trust someone with your money. It's not for everyone. I mean, I don't know if I could trust someone to manage my money, particularly an active trader. But he really let us do what we wanted to do. And I remember there was one point in 2007. I'd been having a pretty difficult year, and I was lagging the rest of the PMs. And but I caught on in like the August-September period, and I had a huge like 2-month performance where I was basically up 100% in that 2 months. And I was expecting the year to kind of keep going. I thought, I'd basically make money through the end of the year. But as chance would have it, the market peaked in early November 2007 and started going down. And that was really the peak because the financial recession hit the next year. And off the top, I lost about 20% of my gains, which meant, being up from 100% up to 60% in like 4 days. And I remember as I was losing money, I wasn't selling yet. I thought this is temporary. And Bill called me, and I'm like, oh my gosh, I see his name on my phone. And I answer, and he goes, hey, I just want to make sure you're paying attention to the market. What are your thoughts? Because I'm losing millions of dollars. And he said, I told him my thesis, and he said, okay, well, I'm glad that you're thinking about it. He said, one way or another, you'll learn an important lesson. And that was it. He didn't tell me to sell. He didn't tell me to do anything. He just said that. And he was right. I mean, I learned a very important lesson. I did ultimately go to cash right after that, after having another bad day. And, was out of the market for the rest of the year and for most of the following year. And allowing his PMs to make mistakes, it takes a lot of trust and confidence. So he had that, which really was amazing. When someone of his stature has confidence in you, it kind of helps you have confidence in yourself. The lessons were one, don't try to play against a declining market. I had never really, I think, truly appreciated the importance of the M in Can Slim, just the market environment, until I kind of further my trading career and learned from him that in a down market, chances are you're not going to make money. And I've always thought that I'm smart enough and I work hard enough to make money in any market by, uncovering those kind of hidden gems. But the truth is that in a down market, your odds are going to be so much lower that even if you find those few gems, you're going to have more than enough losers to offset those. So really staying in sync with the market was an extremely important lesson. Partially learned just from my own trading experience and partially just from, Bill, who would, almost mandate that we would get out of the market or raise cash if things weren't looking good. So, he would let us do what we want to do, but we couldn't really stray too far without justifying it.
If you're looking for ways to take your trading to the next level, Investors Underground might be able to help. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms, where you'll find a vibrant community of focused traders who share their trade ideas in real time each day. Members have access to the morning broadcasts, where the IU moderators share their trade ideas for the day ahead during the pre-market session. Members have access to the midweek study sessions and check-ins where the IU moderators and members evaluate trades taken during that week. Members have access to webinars, moderator watch lists, and all the other tools and resources that Investors Underground has to offer. Listeners of the Trader's Journey can access exclusive membership deals available at investorsunderground.com/journey. And now, back to our episode with Charles Harris. Coming back to, Can Slim and all of the different components of trading and that philosophy, were there any particular parts of, Can Slim that you adjusted to fit your trading style and personality, or that you adjusted your personality to focus on blending in with the Can Slim sort of philosophy?
Well, I think as far as trading, kind of understanding yourself and your own personality and your own kind of inherent kind of psychological strengths and weaknesses, or what you normally gravitate to, is really, I think, important to understand and stay true to that, which is why I was swing trading mainly, is because I felt I can more easily find numerous stocks that go up, 15 to 25% than to find one that goes up 400%. I think Bill had an uncanny ability to really hone in on those huge winners. I always thought I had the stock that was going to go up triple digits, but they never quite seemed to work that way. So I don't know that I was ever an incredibly great stock picker, but at least in my early years, I came to appreciate, as far as Can Slim goes, that the N in Can Slim, the new, was, I think, the most important factor. What is really special about this company that sets it apart from its competition? What is their moat? What is their special innovation? What is their competitive edge? And what is the story behind that? What are they tapping into? And I think if you can hone in on those types of companies and, something new, whether it could be new management, new product, new service, but something that's setting the world on fire and that's truly innovative and different, that's where the most potential is. And if uncovering a stock that has that is what, for me, gives me conviction that I'm onto something. And yes, it should have the fundamentals and the sales and the earnings and the profitability, return on equity, all that stuff, institutional support. But if it doesn't have that special secret sauce, usually I won't have conviction that it's something that really can be a gigantic winner. And then again, the M and Can Slim, the market, trading within sync with the market trend is incredibly important for success. But yeah, I think that I didn't get too hung up on trying to hold all my stocks for like the big win. I was comfortable swing trading even stocks that I thought were big winners, swing trading them, and trying to sell them into strength and buying them back on pullbacks, or buying them at the 50-day moving average or what have you. I think what I learned was that it's really difficult to swing trade around a core position well. My timing was way off. I think it's much easier to buy right than to sell right. It's particularly difficult to know when a stock is extended and about to fall. The stocks that are extended can sometimes get much, much more extended. So I think one thing I've learned is that overtrading your high conviction stocks will usually lead to poorer results than swing trading them. And I kind of proved that to myself during 2020 and 2021 when I was trading Tesla in a very big way. And I still own a lot of Tesla. And in 2020, I was up 1,400% for that year. Of course, that was a great year right after COVID. There were so many incredible opportunities. I would say probably 80 to 90% of my profits came from Tesla that year. I was trading it in a very big way. But all that trading that I did to get to that 1,400% really didn't amount to any more than holding Tesla on margin. Like if I just had all my money in Tesla on margin, which might be a little bit crazy, but Tesla was up 700% that year. So I would have gotten to the same place just holding the stock and would have saved an incredible amount of money in taxes. So that kind of really informed me that, one, overcoming taxes, particularly if you live in California or a high tax state, it's difficult to overcome short-term capital gains and high state taxes. When you're giving half of your money away to the government every year, it's really hard to, it's doable and you can make a lot of money, but really that's a huge obstacle to overcome when you're compounding money. For that reason, I actually stopped trading a margin account for years, taxable account, and just focus on my IRA and Roth IRA, which became my main trading vehicle. What's happened over the years is I've moved more toward the kind of O'Neill approach, where Bill had this ability to hold on to a winner as long as it was winning. He wasn't afraid to just let the stock work for him and continue to pyramid, whereas I've always been afraid of giving back my unrealized gains, right? Maybe I didn't have as much conviction as he had that this had the potential to go so much higher. Over the years, and particularly with the Tesla trade, which was the first time I ever had long-term capital gains, was in Tesla. I traded it. I didn't have any long-term capital gains until 2022, because I traded it very actively during 2020. In 2020, I decided to lock in all my gains in my margin account. I was just really proud of that, that 1,400% year. I, made an 8-figure gain. I was really just very proud of myself, having, blown up just several years earlier to kind of be at an all-time high. Just was very gratifying. And, when I had that last blow up, I always wondered, I knew I would come back. I just didn't know how long it would take. I thought it could take 5 to 10 years. And being able to come back in really 1 to 2 years was incredible for me. Of course, I ended up blowing up again, essentially. Not completely, but I ended up, really making a serious error in my margin account. Also holding Tesla pretty much all the way back down on margin. Staying margin through a downtrend was just devastating. And so that was another lesson to learn, is no matter how much you believe in something and you want to hold something for the long term, it's great, hold it for the long term, even if you have gains. But if you continue to kind of buy and add to your position in a stock that's trending down, and you're on margin, you're not going to survive. You're going to blow up. There's just no way to do it. So, one of those important lessons I learned was, if you're going to try to hold a stock for the long term, a high conviction stock that you believe has the potential to really be something special over a 5 or 10 year period, don't do it on margin. It's too dangerous, particularly if the stock is going down. So that was, super important lesson to learn, is, not being too extreme. I think that's one of the things I learned in my own therapy, um, which was kind of at the root of these blow-ups, were kind of some personal issues of worthiness and so forth that I dealt with, um, with a therapist. I didn't seek out the therapist to work on my trading, but it's interesting how it all ties together. What's going on inside your mind, elements of your childhood, the way you grew up, it all, you can't really escape that, and it will show up in your trading. I've seen a lot of traders sabotage their own success because of issues that are completely unrelated to the market, but cause them to make, bad trading decisions, even if they know the rules, not follow the rules. I mean, the rules of trading are pretty easy. It doesn't take a genius to cut losses, to pyramid winners, to learn how to analyze a chart pattern, research a stock. I mean, anyone, I think, can do it. I think trading is very accessible, and I think that's why so many people get excited and open accounts and try to make it. It's just so accessible, but it's a lot harder than it looks. And I think the reason is because people can't follow rules. They can't. Or they're not willing to do the work. I think far too many people rely on other people's opinions, and other people's advice and stock picks. And I think you have to do your own research and come up with your own conviction, because if you don't have confidence and conviction, it's really hard to be successful over the long term. It's easy to get lucky, but it's not easy to get lucky over and over. So yeah, it takes a little bit of perseverance, and you have to love it, and you have to be passionate about it, and really do the work.
You brought up the importance of being able to keep yourself basically on track with your rules and not break your rules. And I've heard you say before that, it's not enough to know your rules. You have to be able to follow them and not break them the next time.
Yeah.
And so I wanted to really talk about that, because, what does it take to prevent yourself from breaking rules repeatedly over and over? What kind of work has to go in, even if you know what you have to do the next time around when you're on tilt, or, emotions are high? How does a trader break that?
Yeah, that's a great question. I think that is really the root of every traders who haven't been successful or who blow up. That is the root, is what is causing you to make decisions that are bad decisions. It's almost like I remember Livermore wrote in his book Reminiscences of a Stock Operator, about Jesse Livermore. There are times when a trader knows he's doing something wrong, and yet he'll continue to make that mistake, not knowing that it's not a good decision. And that's where I guess hope comes into the equation, or you just start dreaming, dreaming and hoping. And I think a lot of it is ego and checking your own ego. Admitting you're wrong is never easy, but if you can't admit you're wrong pretty quickly in the market, it's going to be hard to, I think, have a long-term career. For me, figuring out why, I used to keep a trading journal, and I would write down every time I'd have a major drawdown, what did I do wrong, and what can I fix and make it right. And I keep them in a notebook, and so I knew what not to do. And then next time I had a major drawdown, I'd do the same thing. I'd write, what were my mistakes. And this happened over and over. And I remember one day, I started to look at, a history of 10 years of notes in my trading journal, and I was writing the same thing, every time. So it's almost like I knew everything very early in my career, and yet I kept making the same mistakes. For me, um, getting out of that, and I'm still in a way recovering from that, because my last uh, blow up was pretty bad. I mean, in my margin account particularly. If you're not trading on margin, it's pretty hard to get into too much trouble, I think, unless you have a really bad luck, or really picking the wrong stocks and not taking any losses. But it's really leverage and concentration that causes the big problems if you don't handle your positions properly. And for me, it was dealing with just in my own internal feelings about myself and my worthiness, and what was I trying to prove um, to everyone else that I wasn't feeling inside. Um, that was what was causing me to make these kind of all or none decisions, and really trading at extremes where I'd have, even, having tremendous success, it was never enough to fill my bucket. It was never enough to make me feel really good about myself, or to kind of feel whole. So I continue to make decisions and let it ride, and just, so that I can just keep parlaying my winnings. But eventually, those good times run out, and, it's time to exit the market or exit a position. And even if I exited the position, I would just get into another position, maybe in a bad market, and continue to lose. Like, I could never stop trading. I could never stop trying to prove myself. So for me, dealing with those issues is what I think has taken me to a new level where I am now, where I'm not trying to prove myself. I've done really well, but I'm when I was much younger, I thought, oh, I'm going to be a billionaire. I'm going to be the greatest trader ever. I'm going to go down in history. I would, all those things meant a lot to me, like to be known. And now, I really just care about living a meaningful life, having a good life, taking time away from trading. Um, I took a trip this past summer with my kids, separate trips with both of my kids, which was incredible. I took a month off. I went to Europe. Like, those are things I'd never done in my entire career, of almost 30 years. And I'm just starting to kind of get to that now. So I think if you're trying to prove something in the market, it's easy to get into a lot of trouble. That's really not where you want to prove yourself. Um, you just want to, I think Bill would say, slow and steady. Um, Follow the rules, stay disciplined, and that's how you compound wealth. This kind of, the way I've had like crazy success during short sprints, but I had never been able to maintain it. I think, until now, going forward, I think my results will be different, um, over a longer period of time. But it'll take time to kind of prove that out. Um, but I'm patient, and I'm willing to let that happen. I think it's also important to realize you don't need every penny in the market, and that's new for me. I've always, literally, any money that comes in, or any money that comes in from bonuses, I put in the market. So literally all my net worth was in the market at all times. And it's hard to sleep at night at times if you're on a losing streak. Um, you can cause yourself, a lot of sleepless nights. So now I think, one thing my therapist and I talked about was just, taking care of yourself and your own kind of psychological health by having assets, or like, I have no debt in my life. That's for one thing. That's one thing I've done. I own my house outright. Um, everything I own, I own. There's no debt. I think that's important. not having financial obligations that you depend on trading for. I think that's a lot of pressure. I think Livermore said, trading to make your daily bread is a really hard thing to do. So if you're if you're trading to pay your bills, that's just too difficult, too much pressure. But just having self-care and keeping money out of the market, a surplus of savings, I think is a smart idea. That's something that Livermore talked about, taking half your profits and moving it out of the market, almost to protect it from yourself and your own inclinations. Because I know my inclinations are to be aggressive, and it kills me to have money sitting in a bank earning a few percent interest when I think, well, I can double this. Why would I do that? But the goal isn't to make money with those savings. It's just to preserve my kind of my own psychology and allow me the kind of the ability to take risk with all my other money, So those are new things for me that I've learned, that it doesn't have to be all or none. I don't need to push so hard. It's okay to keep some money out of the market. And I think at this point in my career, I don't really anticipate putting a lot more money in the market, because most of my money is in the market already. I think from this point on, I'll probably be taking money out of the market, and maybe diversifying or buying, some homes, or, traveling or that kind of thing. But yeah, I don't think I need to continue to push so hard. So that, I don't know whether it's age or just experience, but I think being in a place where you feel good about yourself and good about your own success, where you don't have to prove yourself to anyone, and allowing yourself to get rich slowly in the market, as opposed to trying to extrapolate so quickly, I think is maybe a saner way to approach the market. I remember when I started, even up until, maybe 10 years ago, I was really just trying to compound my money monthly, swing trading. I was just trying to make 10 to 20% a month swing trading stocks. And if you think about that, like, how hard is it to, pick, if you're in a concentrated positions, if you just find one or two stocks that go up 10 or 20% over a few months, it doesn't really seem that difficult. And so I was trying to do that. And at times I would have periods where, again, if you're up, 1,000% in a year, or up 700%, that's incredible to be able to compound money that quickly. But I don't think that those results are sustainable. I think if you have those results, you got to make sure you really hold on to those crazy profits at those times, because usually those periods of super success are followed by really nasty drawdowns if you're not careful. That's what I've always experienced. So I don't know. I think I'm just taking a slower, more saner view. I don't trade nearly as actively as I do. I still trade, concentrated positions. I think in my personal account right now, I have about 5 positions. Tesla's been an overweighted position since 2020. Even when I went to cash at the end of 2020, like 2021, I went right back in trading again. So that's just been a big position that I intend to just hold for a long period of time, and for better or worse. I mean, honestly, it's holding me back this year because it's an overweighted position that's down for the year. So I'm not too happy about that, and I don't know. Maybe I would choose to do something different in hindsight, but I think my ability to time stocks, I've always thought they're better than they actually are. It's hard to time a stock. So if you have, very high conviction in something in a low cost basis, and it goes dormant for several years. It's not ideal, but I'm afraid of losing my position. So I'd rather just stay with something I believe in than saying, well, I'll just sell it now and buy it back. Sounds easy. You can always do that, but you know, uh, I think it's not as easy. Once you lose your position, you have to make new decisions. What do I sell to buy something back? You might find something else you like that you don't want to sell. It's just I found it's harder. So I'm comfortable having an overweighted position in something I have high conviction in, and then I'm swing trading these other stocks around it. So that's kind of the way I approach the market these days.
What are some of the longer term goals that you have for your trading career? Is it to reach certain P&Ls like some people might have, or is it, more to find balance, which, correct me if I'm wrong, it sounds more like you're trying to find, what is the next 5 or 10 years or longer in terms of goals look like for you, Charles?
Yeah, great question. It's very different now than it was when I was younger. Both when I was more active and trading super, super actively, like literally making thousands of trades a year, to now making hundreds of trades, but really just slowing down a bit, not trading, a half a dozen or more stocks every single day and a lot of in and out, which served me well at the time. I think for one thing, actually having some success in building up my accounts has caused me to, one, slow down and be more selective, because I require a lot of liquidity. I will not trade stocks that don't have sufficient liquidity. I don't want to be moving stocks up and down. Not that I'm that big, but if you're trading thin stocks, it doesn't even take a large account to really start moving things around. So I've learned my lesson multiple times not to get stuck in something that doesn't have, good liquidity. So that already narrows down thousands of stocks, honestly. So I only trade stocks with good liquidity that I really believe in. I think a lot of traders focus way too much on just the chart and don't really know what the companies do or what their edge is. And I think in order to ride out and play a big winner, you really need that conviction to allow you to sit through the stress. If you're too jumpy, I think chances are you will not be able to stick with something for the big move. I mean, it takes a lot of fortitude to stick with something going down. I remember Livermore said, he could watch a third or half his profits disappear and not, blink an eye because he knew what he had. It's not easy for, a lot of traders to do. So I've actually always had that ability to not get too stressed out until things get pretty bad. For better or worse, sometimes I really am wrong and I should be cutting, and I'm a little bit slow to, pull the trigger. But these days I'm not really setting goals as to like what I want to do each year. There was a goal back. I remember when I was much younger, I had a sheet on my wall, like right above my computer, that had, how much money I'd have if I double my money every year. And like it had me, in 10 years I'd be a billionaire. And I thought I can do that, especially when you're coming off, a 700% year and 1,000% year, in 2 out of 3 years back in the late 90s. I thought I'll never be up less than 100% a year again. I mean, that's like a no-brainer. And I learned a harsh lesson that is very market specific. I mean, those types of great gains, they're there, but they're not there all the time. I mean, they're there in great, forgiving exciting markets, trending markets, and you're not always in those types of markets. Um, so, I used to have set goals to, have a certain performance each year, double my account each year. Now I just kind of let it, whatever it is, it is. I'm really trying to trade more the process and not worry about the results so much. I think if you just focus on the process and put on good trades, the results will take care of themselves. I think being too focused on the results can really mess you up. Just focus on putting on good trades, following your rules, not hesitating, getting in at the right points, getting out at the right points, trimming when you should, trading around a core position properly. If you do all that right, the results will follow. So I think it's hard to not be kind of married to the results. It's very exciting to trade and having your, being able to look at your net worth and how it's changing every second of the day is hard not to be attached to that. But I think I would recommend that traders get away from that if they can and just focus on trading well. And those results will take care of themselves at the end of the year or, over a period of time.
The last question I have is a bit of a two-parter. What advice would you give for traders who are doing extremely well in 2025? And what advice would you give to traders who are struggling in 2025 and maybe facing a drawdown and, questioning whether or not they can make an actual career of trading?
Yeah, good question. Well, for those who are doing well this year, we've been in a really strong market since the lows in April of this year. And so we've been in a great bull run so far, a great uptrending market. It's been quite forgiving. There's been lots of amazing opportunities. So I wouldn't be surprised if there are people doing extremely well if you're in those right sectors, particularly the AI related stocks, since the lows in April have been pretty strong. And so there's been a lot of great leadership. I think the advice I would give if you're doing well is just don't take your eye off the ball. Don't allow your ego to get to blow up and to think you're maybe better than you are. There's a saying that everyone thinks they're a genius in a bull market. And I've one thing I've always told people in some of the workshops I've taught is people have when you're doing really well, people have a tendency to extrapolate their short-term results. So if they're up, 100% in 3 or 4 months, they extrapolate that and say, well, I'll be up 100% in the next 3 or 4 months, and play out where they think they're going to be. It just goes back to what I just said before is don't worry so much about what you're trying to achieve percentage-wise. Just put on good trades. And don't think you're smarter than you are. I mean, if you're making these crazy outside gains, the market's giving you a gift. And it's great that you're capitalizing on it. I mean, that takes skill and a little bit of luck, but it does take something. So, I mean, not to take anything away from people who are doing extremely well in a great market, just stay disciplined, follow your rules, and realize that, if you're playing the same way, when the conditions change, you can just as easily lose a lot of money very, very quickly. So just stay disciplined and kind of keep your head on straight is what I'd say, and don't get carried away. And for those people that are maybe struggling in a good year, I think one, it takes a lot of resilience and perseverance to succeed in the market over time. I think I've been through so many ups and downs over the years, and really being resilient and believing in yourself is the most important characteristic you need to, I think, to make it over the long term. And if you're struggling, One, don't be too hard on yourself. Have some grace and give yourself a break. I mean, setbacks are natural and unavoidable in the market, but if you're losing money, I would say stop trading and do a post analysis and figure out what you're doing wrong. And when you come back to the markets, and remember, the markets will always be there. The markets aren't going anywhere, so there's no rush you should feel to get in now. I mean, if for those people who are trading, unless you're starting in your 90s or something, I mean, we all have a long path to make money in the market. So I would stop trading, do a post analysis, figure out what's happening, and and um, and follow the and write some rules like, well, this is what I'm doing wrong. I'm either hesitating at the pivot points, I'm selling too quickly, I'm getting shaken out, I'm riding stocks up and then all the way back down. I mean, there's so many mistakes that people make. Maybe they're over concentrating, maybe you're under concentrating, there's just a million things. And maybe you're trading out of sync with the market or not rotating with the market. There's many different, issues that people have. So figure out what those are. And when you come back, follow those rules. And then if you find out that you keep violating the same rules, over market cycles, which has happened to me, frankly, you need to maybe go deeper and find out, well, why am I doing that? For me, it took years of therapy, which I have no regrets about. I mean, I'm so much better for it as a trader and just as a human being. It's changed my whole outlook in how I approach relationships, how I am with my kids, how I am with my friends, how I am in the world, and how I am as a trader. It's like been beneficial in every way. So, and if that's what is required, then do the work. You have to put the work in, but don't give up. Some people have early success right off the bat. And so they think they know the rules or understand the discipline because they haven't been tested. And you find out pretty quickly when conditions change that most of the time you don't have what it takes yet because you haven't been through the hard times. I don't think I've ever met a trader that hasn't been through hard times. And I think some of the best traders and most successful traders and hedge fund managers, lost everything at certain points in their career, or when bust at least once and learn those important lessons. So it's natural and normal for that to happen, and just be resilient. Understand that those setbacks are going to occur, and just come back small and regain your confidence. So when you come back to the market after a drawdown, your goal isn't to make that money back quickly. Your goal is to just build confidence in yourself, because you cannot be a successful trader without confidence. It takes confidence and conviction to trade properly, to not hesitate. If you're hesitating and questioning yourself, you're never going to make any money. You have to be on almost like autopilot. Like when I'm trading well, when I'm in the zone, I'm not thinking about what I'm doing. I'm just doing it. I see it and I act. Just like if you're playing tennis or, playing a sport and you're doing it well and you're in the zone, you're not thinking about how to do it. You're just doing it. And trading is the same way. And so that you'll be surprised how quickly you can come out of a losing streak once you have a few winning trades and your confidence starts to come back. So it'll come back. Don't question it. It will come back. Just start small and follow the rules. And if you have sound rules and you're in the right trading environment, it's almost inevitable that you'll make money.
Thank you. I think that's incredible advice for both types of traders who are doing really well and those aren't doing so well. A lot to think about there. Charles, I really, really appreciate you doing this and sharing your trading journey, not just with me and our audience, but, for everybody watching. I highly recommend going and finding Charles' two-part presentation called A Trader's Journey. because he really goes in depth about what he was feeling and being very introspective about not just, his psychology at the time, lessons learned, but also, specifics about the stocks that he's been trading and everything that goes along with this trading journey. So Charles, thank you so much for doing this. I really appreciate it. It's an honor to get to speak with you and record this episode. Thank you.
You're welcome, Anthony. It was a real pleasure anytime.
We hope you enjoyed this episode of The Trader's Journey. We have additional episodes we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they're available. Thanks for tuning in.